Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, July 20th, 5:01 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, still in a correction from the standpoint that we're under the 200-day moving average, but in a short term, and if the market continues to participate, we'll be in a medium-term uptrend also by the end of the week. Take a look over here at the trend gauge. You can see leaders flashing neutral with a green arrow, making some progress. Short term today, we went from neutral to a bullish uptrend as we've got 2 to 3 closes above the 21-day moving average. And medium term, the arrow moved a little closer to the middle as we have 2 closes above the 50-day. However, the 50-day, for the most part, the slope of the line is still headed down. We want to see that flatten out and curl up and survive a first test of support before we come off of bearish there. But we are making progress in the indexes and also in individual stocks. Long term, still firmly in a downtrend below the 200-day moving average. So what happened today? Bulls continue to run after a big day yesterday. You would expect a pullback, and we did get a couple of intraday pullbacks, but every time buyers showed up, and that's an extremely good sign when bad news is bought up. So second close above the 50-day moving average. We'll take a look at the charts here momentarily. Leader on the day, the G6, good sign for us. We like when the G6, this is our 6 ETF, 6 growth ETF composite that we track as a way to keep our finger on the pulse of what's going on in growth stocks, up 1.91% today. S&P 500 up 0.6%, NASDAQ 100 up 1.6%, Dow just barely up 0.15%, mid caps up 1%. Small cap Russell up 1.6%. Global diversified 60/40 up 0.17%. Protection, our in-house flagship portfolio, up approximately 0.48%. Let's take a look at some charts now to detail this. But first, let's take a look at the team here at Revere. Trend following is what we do. Participating in market uptrends, getting the heck out of the way in market downtrends. When we're stuck in between the two, we pull back a little bit, don't completely get out of the market, want to keep it depends on where we are relative to the trend gauge that we go over in every video, how much exposure we have to the market. So now that our short term is green, we want to have at least 60. We want to at least be as long as a 60/40 portfolio. That's what we are now. We'll go into a little more details when we check the tail of the tape here. We continue to get longer as the market continues to get better or has healthy pullbacks that are contained by support. So that's what we're looking for right now. And of course, if you're following us, you know how we've been out of the way most of the year as we've been in a bear market. If you're interested in this common sense approach, you can email anybody on this team, Dan, Tim, Hunter, Muriel, or Don at revereasset.com, or call 855-REAL-WEALTH. That's 855-732-5932. Let's first check in on the S&P 500, bring up the tail of the tape here, and same headwinds we've been battling for a while. No change there. Put call a little bit under 1. VIX breaking below 24. Glad to see that. Sometimes if this from this level, you can get a whoosh lower, and we'll be watching for that. That should coincide with more upward progress in the indexes and in leading stocks. Fear and greed up 6 today to 39. We get to 50. We're actually the high 40s. We're in a neutral area here, so a lot of progress has been made. This isn't a pure sentiment index. This is a composite of sentiment and several different metrics related to the overall health of the market. So it's not a pure sentiment. We are having some discussions about putting some more sentiment information up in here, something that is more just a pure measurement of what investors are feeling. But they're different groups of investors. You have to be concerned, what are the professionals doing? What's retail doing? There's a lot that goes into it. So for now, we're going to stick with this. Bull case firming itself up here. Once we get over the 21 and we're in rally mode, this is where we want to start. As I said, getting money into the market. This is what we're doing. Confirmed on the 15th and 19th, and certainly on the 20th today. Bear case not totally dead yet. 2 closes above the 50. One bad day could undo this, taking us back below the 50-day. So we got the yellow arrow here. We do have, as I said, 2 closes above the 50-day though. So the bear case on life support. So some news today at 12:41, Google came out with an announcement very similar to Apple's announcement on Monday that they're going to slow hiring for 2022, and the market took a pretty big dip down but recovered by the close. Let's take a look at the S&P 500 right now in the 5-minute chart. So you can see here we opened about flat, sold off a little bit down to 39.22 support, just barely below Tuesday afternoon's pullback, and then a big move to the upside. Nice little flag here, made a higher high intraday. Here's where the Google news came out during this 12:45 5-minute candle, and then we had a little bit of a bounce, another move down, another bounce, and then a third leg down. Coming down to 39.36. Now, what's 39.36? That pretty much coincides with the high of yesterday afternoon and the highs of the morning. It's great when highs turn into support when you pull back. This just adds to the confidence level that you're not going to have a complete breakdown, which 3 legs down, but still contained by the highs of Tuesday, the late highs for Tuesday, mid-afternoon, late afternoon, and early morning of today. That's a good sign. 39.36 is where we bounced up into the close. You can see this cup and handle pattern that we're forming into the close, into the handle. So held those gains, closed in the upper part of the range. That's a good day for the S&P 500. Let's put it in context of the daily chart here. You can see this was the last shakeout on 7/14. One close above the 21 here. We started dipping some toes in the water, move up higher, but a harsh reversal on Monday. And let's go back to a 15-minute chart here so you can see this harsh reversal from Monday. This is when Apple came out and said they were slowing hiring and spending, and the market really sold off, looked like it could be killing any attempt at a rally that we had all the way down to 38.19, but then the gap up Tuesday and the follow through to the upside on Wednesday, undoing that weakness. Let's go back to the daily chart here. So we put a hedge on Tuesday when we broke below the 21, got quickly back above the 21, took that off on Tuesday morning after the 7/18's harsh reversal. So this was Friday, this is Monday, this is Tuesday, here's today. Closed above the 21 and above the 50. I mentioned last night, wouldn't be surprised to see a little bit of a pullback. Still wanted to see 3,900 hold. We didn't get anywhere near 3,900 today. The low is 39.22. The high of the day 39.74. So we're entering this big vacuum here that takes us up to 40.17, which was this was the break of this consolidation the day before the prior CPI report. So not a lot of resistance into here to get us up to this 40.17 level. That's something I'm keeping an eye on. Of course, we've got the round number 4,000 that we've got to get through before we get to that. This has been, if you're measuring from high to low, a fairly sharp move over 5 days, despite only 3 positive closes. You can count the first day as a positive because we closed at the very top of the range, so that really considers it a shakeout day. 3 days up, the hard reversal I mentioned on Monday, but reclaiming it on Tuesday, reclaiming it on Wednesday above the 50-day moving average. Good looking stuff here. Let's go to the NASDAQ 100, the QQQ. Note that this area here, we came very quickly up to this area relative to the S&P 500, and you can tell that by the way the relative strength line on the NASDAQ 100 has been trending higher since early June. So the bottom of this area was about 303 to 305. That's where we challenged today. If you take a look at a 60-minute chart, it's pretty evident here. This is the bottom of that consolidation here before we had that breakdown on CPI. So you can see how quickly we got back up to there. Let's compare that to the S&P 500. You can see the distance that we still have to get up to this level. All the way up here, it's around 4,100, very similar to that. So quite a ways to go. And probably the big difference between what's been going on with the NASDAQ and the S&P 500 over the last couple of weeks has been the weakness in energy stocks, which they had relative strength to the S&P while they were going up. This pullback, the relative strength versus the Qs has been lagging. Of course, the S&P sets the tone as the overall market with its 11 sectors, but NASDAQ outperforming because it being tech heavy and energy light. So there's the S&P 500. Let's take a look at the Dow Jones Industrial Average here, very similar to the S&P. You had your hammer here on the 14th, on the 15th, above the 21, came up into the 50 and failed and had that hard reversal on Monday, reclaimed it on Tuesday, higher high on Wednesday, coming into this 32,000 area. Note that it is around 32.5 is the low of this consolidation that we want to look for the next resistance to be. Mid caps now showing relative strength this week. First close, you could argue the first one, yes, you could say Monday right on the 50-day moving average, sorry, Tuesday right on the 50-day moving average. So just the first close above it here, we want to see that hold on any pullback. And let's go to IWM. Small cap, second close above the 50-day. Also want to note the 8-day is crossing up through the 21 on all 5 of the indexes. That's also bullish. The 21-day EMA also pointing up on all of the indexes, and the 50-day moving average starting to flatten out, which is certainly a good sign. The next thing we want to see is it curving to the upside, and we would also love to see the 21-day moving average come up through the 50. So from an index perspective, that's what we're looking at. What else did we deal with today coming in? S&P 500, 3,900 to 3,920 support, 3,980 to 4,000 resistance. We spent the whole range between these two areas. So let's, as long as the bottom portion provides support, we'll wait and see if we can break above the 3,980 to 4,000 area and then get to that 4017 to fill the gap. NASDAQ 100 didn't challenge the 50-day moving average on the downside, did come into resistance between this 303 and 305 area. UUP, the dollar, did bounce. We talked about how the S&P has been moving opposite the dollar. The dollar did have some strength today as it bounced off the 21, but that didn't stop stocks from being higher too. So for now, a little bit of a divergence between what the dollar and what stocks are doing. Very good sign. And I did mention the 821 positive cross on the indexes. What was strong today? Digital ads on the back of the Netflix earnings report. Let's take a look at this. Netflix was up 6% pre-market, gave it all back, but recovered it to close near the highs of the day. So that's a good sign. Some of the other digital ad related stocks, Trade Desk trying to make a comeback from the dead, and also Roku had a good day also. See if that can get over 100. So digital ads were strong today. IGV software very strong today, up 3%, while Sky, this is a cloud ETF, all the cloud names for the most part, I would say, okay, Palo Alto is down today, but most of the cloud names up today. Not a lot of volume, but that's a good candle, up 4% above its tightly packed 821 and 50-day moving average. We're seeing a lot of this pattern in a lot of potential leading stocks and ETFs. Another good sign for the market. So basically, we're trying to put in bottoming bases all over the place in the market. And then we'll just focus on what acts best. The SOX, another good day today, second close above the 50-day moving average, despite no CHIPS Act progress that I'm aware of anyway today. On the downside, biotech started strong, got weak, but then ended up positive on the day. So I can actually move that back into the positive column. OIH, BKR, Baker Hughes, big oil equipment and services company, bad earnings report, down 8%, but it did put in a hammer to close near the in the upper range of the day, the 80% range. So maybe that got rid of everybody. We're going to keep an eye on some of these oil stocks are looking better. Oxy making new recent highs. Let's check out Valero trying to get back above its 21. We don't know if this is a dead cat bounce in oil or not. A lot of them are respecting some support that happened over here from earlier in the year, but normally oil doesn't act well if you've got a recession on the horizon. But with all the nutty green energy policies that have been implemented in the world, we've basically got a shortage to the ability to cool and heat people's homes, which is certainly not a good thing. So I mentioned OIH was negative, Baker Hughes, also Halliburton and Schlumberger in that make up the big three in there. That was down on the day. And also down on the day, defensive sectors, XLP, UVRE, that's staples, utilities, healthcare, and real estate. In the portfolio today, we did a pyramid add on Celsius, now have a 4% size on this as we saw some nice strength come into it. The other individual holding that we have, CLR. Yes, I'm aware that they had an offer for 70 to take private. That's one of the reasons why the chart is so good. The day after it happened, Harold Hamm, the former CEO, his trust, trying to buy out the 15 or so percent of the company that he doesn't own. This thing popped all the way up to $75.49 the day after the $70 cash offer, which is being considered by the board. So that should put a floor underneath CLR, and it continues to trade in tandem with oil and have one of the better looking charts as it's above the 50 and the 21-day moving averages. Other than that, we still own our VTIP, which is basically this is at break even. We're down about 1.5% on it, and we got 1.5% dividend so far. So really this is a glorified money market, and we have a large position, 25% position in SSO, which is the 2 times S&P 500. We trade this based on the S&P 500 chart, not the SSO chart. So that brought our adjusted beta up to 0.67 today. Another stock I took a hard look at today to consider buying is something that has come to the fore with the rolling blackouts all over the world, Generac. You can see some nice volume patterns today in this. Bounced off this 200 area all the way up to 250 in 4 days. Had an alert set, didn't pull the trigger on it, but it now is above the 50-day moving average and the 21-day moving average. And when a thesis matches price, yes, I realize it's below the declining 200, but this is a pretty decent base that it's carved out over the past 3 months. So definitely something we're taking a look at. Some other things in the 21 over 21 that are not doing so well. Merck broke below not only the 21 and the 50-day moving average. As I mentioned in the video last night, a lot of money that piled into healthcare as a defensive measure has come out over the last week or so. Merck, one of the victims there. UTHR lost a patent lawsuit, and big move down on Tuesday, bounced at the 50-day twice now, but this is not the way you want a leader to look. So in danger of coming off the 21 over 21 at the end of the week. AMT, American Tower, this is more a defensive stock, not making any progress. You can see the relative strength falling off over the last week and a half. On that, I mentioned Generac looking good. Another one that's coming back from the dead is Silvergate. Look at the volume the last 3 days in Silvergate, the last 2 days being on earnings, and they got a price upgrade today. Very rare to see volume higher than on earnings day. This is very bullish. In my opinion, we're coming into this 100 area, which has been resistance from over here. Actually, it was support back in January, February, March. It was finally broken in May. We'll see that should act as resistance if we get up into 100 Look at the numbers on this: 58% and 72% for 2022 and 2023, 89% earnings. Sales growth, 41% earnings growth. The numbers on this are just really good. They continue to get higher despite the fact that crypto suffered for much of the first half of this year. It didn't seem to impact their numbers. This big sell-off area here coincided with a big sell-off in crypto, but SI with a really good earnings report and a really good reaction to the earnings report, which is what's most important. Expect to see this one in the 21 over 21 when I update it in Friday's video. That's going to wrap it. As always, love to hear from you. You can email me, don@revereasset.com, or phone 855-REAL-WELL. So to bottom line it, bulls continue to take control, second close above the 50-day moving average. We continue to add more to our positions and let them go higher. We want to see the first pullback that happens, that support holds. The levels that were resistant should turn into support and support price on any move down, similar to the way they did today intraday. On any time the S&P 500 pulled back, that's what we want to see on a bigger term on the indexes. So wrapping up Wednesday, July 20th, this is Don Vandenbord telling it like it is. Remember, it's not how much you make in the market, it's how much you can keep. Thanks for listening and have a great day.